Hello everyone, welcome back to Let's Learn. So if you are new to this channel, please subscribe to the channel and also click the bell icon to get the latest notification. So today we are starting with the secondary market. So far we discussed about financial market, money market, capital market and also about the primary market. So if you have not seen this video, I will be clipping the playlist in the description box. Please watch it. Okay. So today we are going to discuss the four topics, that is what is secondary market, then the functions of secondary market, listing and delisting, and finally demutualization of stock exchange. So let's start the video. Secondary market. Secondary market is also known as stock exchange. Okay. Secondary market deals with sale and purchase of already issued equity and debt securities. We have already learned that if a company issues equity or debt security for the first time, then it is in the primary market. Okay. And already issued equity shares and debt securities are dealt in the secondary market. So, who regulates the secondary market? SEBI, company law board and the respective stock exchanges regulates the secondary market. In secondary market, investors exchange with each other rather than with the issuing entity. Okay, so the already brought in shares or debentures are exchanged. That is, the same securities are again bought or sold by the investors in the secondary market. Okay, let's also see some of the major difference between primary market and secondary market. Okay, as I told earlier, primary market is for the new issue and secondary market is to deal with the already issued equity shares and debt securities. The second difference we can say that primary market deals with issuing of securities and secondary market deals with buying and selling of those securities. Okay. Third, we can say that primary market has no tangible form of organization setup, but secondary market has a physical existence because dealings are mainly done through the stock exchanges. Stock exchanges, we can take an example of NSE, BSE in India. Okay. Then the primary market for a security comes to an end when the subscription list is closed and the allotment is done. It means that the primary market for a security exists only for a limited period. But in secondary market, they have a long and continuous existence because the securities are bought and sold continuously. Okay, so primary market will be for a limited time period and secondary market is for a longer time period. Okay, then another difference we can say that primary market is a source of fund to a new or existing company. But in secondary market, companies are not involving directly. So it is not a source for fund for new companies and existing companies. So these are the major differences of primary market and secondary market. Now let's see the functions of secondary market. The main functions of secondary market can be three, that is capital formation, security price formation and creation of marketplace. Okay, let's see what each of these means. So the first one function is capital formation. As we all know, that is there is a large number of persons engaged in buying and selling of these securities through secondary market. So all these people's savings are channelized through stock markets for the development of the nation. And the investors are always looking for profitable investment. So when they invest only in securities of a profitable companies, secondary market becomes a channel of capital formation for those reputed companies. So, if a company wants to raise fund, uh, they can raise fund through the secondary market. So, secondary market main function is the capital formation. The second function is security price formation. Here, the prices of the securities are formed through the dealings done in secondary market. That is, these are generally decided according to the opinion of investors. The investors evaluate the performance and the prospectus of the company and determine the price of the security. So, the second function of secondary market is security price formation. The third function is creation of a marketplace. As I said, secondary market has a physical existence, that is through stock exchanges. The buyers and sellers assemble in the stock exchange for buying and selling of security. So the marketplace is formed and always regulated by rules and regulations. So these are the main three functions of secondary market. Next, we can see an important topic in secondary market, that is listing of securities. Let's see what is meant by listing of securities. Listing simply means the enrollment of name of the company in an official list maintained in the stock exchanges. These securities are only allowed to be traded in the stock exchange once they are listed. Okay, listing is compulsory in case of companies which intend to offer share or debenture for public issue through the issue of prospectus. So, what is the objective of listing? First one is to creation of a readily marketability, liquidity, and pre-negotiability to stock and shares. Second one is to mobilize savings for the economic development. Third, and the most important, is to protect the interest of investors by ensuring full disclosure. That is, the investors' interest is fully protected as the companies are listed and the stock exchange knows every details of this company. Okay, and the fourth objective of listing is to ensure supervision and control of trading. That is, the does not occur any um, illegal trading in the stock exchange. So the SEBI or the stock exchange can control it. So listing is a very important thing for security. So listing is simply the enrollment of a name of a company in the official list maintained in the stock exchange. Once it is listed in the stock exchange, the securities are only allowed to be traded in the stock exchange. Okay. So what is meant by delisting of securities? Delisting is simply the removal of a particular security for dealing in the stock exchange. Okay. So once it is removed from the stock exchange register, once the name is removed from the stock exchange register, the particular company cannot trade or cannot deal in the stock exchange. So delisting can be of two types. First one is voluntary delisting and the second is compulsory delisting. So, what is voluntary delisting? Voluntary delisting means delisting of securities of a body corporate or a company voluntarily by a promoter or an acquirer or any other person other than stock exchange. That is, other than stock exchange, any other person who removes the name from the stock exchange, then it will be a voluntary delisting. But there are some conditions for a company to be satisfied before voluntarily delisting from the stock exchange. That is, first one is the securities of the company have been listed for a minimum period of 3 years on any of the stock exchange. And the second one is an exit opportunity has been given to the investors for the purpose of which an exit price shall be determined in accordance with the book building process. So after these two conditions are satisfied, then only the company can go for the voluntary delisting. Okay. So the second one is compulsory delisting. Compulsory delisting means delisting of the securities of a company by a stock exchange itself. The stock exchange may delist company which have been suspended for a minimum period of 6 months for non-compliance with the listing agreement. Okay, but before suspending the dealings in security, the company will be given an opportunity of being heard by the stock exchange. If the suspension period exceeds 3 months, the company can go for an appeal to the SEBI against the suspension, and the SEBI gives an opportunity to stock exchange of being heard. And on the basis of this, SEBI may set aside or change the decision of the stock exchange. The stock exchange may also delist a company if the number of shareholders fall below 5 for every 1 lakh capital offered to the public, or if the public shareholding falls below 50% of the public offer. So in three cases, the stock exchange can go on for a compulsory delisting of a company. First one is when it is suspended, when the company is suspended for a 6 month for non-compliance with the listing agreement. Second, when the shareholders, that is the number of shareholders, falls below 5 for every 1 lakh capital offered to the public, or when the public shareholding falls below 50% of the public offer. So in these three cases, the stock exchange can go for a compulsory delisting of a company. So we discussed two topics, that is listing and delisting. Listing means just enrolling the company's name in the stock exchange, and once it is entered into the stock exchange, then the company can only trade its securities through the stock exchange. Second one is delisting of security. It is a removal of a particular security of a company from the stock exchange. It may be of two types. First one is voluntary, second one is compulsory. Voluntary delisting is when the company or any person other than stock exchange delist the company, and the second one is compulsory delisting, which is done by the stock exchange. Okay, so the next important term in the secondary market is demutualization of stock exchange. So let's see what is demutualization of stock exchange. It is a process by which a customer owned mutual organization or a cooperative changes legal form to a joint stock company. Okay, that is if a company which is a customer owned mutual organization or a cooperative organization, it changes from that to a joint stock company. Okay, demutualization is a process by which a private member owned company such as cooperative company or a mutual life insurance company changes its structure to become a public traded company owned by the shareholder. Okay, it is also sometimes called as stocking or privatization. So, when a customer owned or a cooperative owned or a private owned company is legally changing all its structure to become a public traded company which is owned by our shareholders, then it is known as demutualization of the stock exchange. So, a stock exchange can demutualize in many ways. One of the common way is to split the membership into two parts, that is trading rights and ownership in a desired ratio. The ownership right is then further split into number of shares, and the total value of which would be equal to the net asset of the exchange at book value. The shares would then be distributed to the members of the exchange and could be even listed on the exchange without making a public offer. Currently, two stock exchanges in India, that is the National Stock Exchange NSE and Over the Counter Exchange of India, that is OTCEI, are demutualized. Okay, so let's see what are the benefits of demutualization. Demutualization leads to separation of ownership and control of stock exchange from trading rights of its members, which eliminates the conflict of interest between exchange and the broker members. Second one is that it reduces the chances of brokers using stock exchange for personal gains. That is, it also help in keeping up with the interest of the investors. Third benefit we can say is that demutualization helps to access more resources. Then we can say it is a corporate structure is best suited for this as it facilitates faster decision making and easy access to finance. So these are the benefits of demutualization. So we can say that demutualization is a process by which a customer owned mutual organization or a cooperative changes its legal form to a joint stock company. Okay, so that's all for today. So we discussed what is meant by secondary market, then we discussed about the functions of secondary market, then listing, delisting, and demutualization. So we covered all these topics. So we are also continuing with the series Let Your Topic Be the Next Video. So to participate in that, just share with me the topics you need in the comment section and I will be doing a video on that. Okay, so please comment down. So if you like the video, please give it a big thumbs up and also share this video and the channel to all the commerce students you know, and please give your precious feedback under the comment section and also suggest some topics for which you want a video on. And those who have not subscribed to the channel, please subscribe to the channel and click the bell icon for the latest notification. I'm uploading a commerce video on a daily basis, so please subscribe and click the bell icon. So keep watching Let's Learn for more commerce topic, and thank you.